Welcome to Investing Compass. Before we begin, a quick note that the information contained in this podcast is general in nature, does not take into consideration your personal objectives, financial situations, or needs. So we are in the middle of share month, of course, and we do have an episode coming up on Fortescue, so we're going to release 2 at a time. So this is a special episode, and we just wanted to chat a little bit about what is happening in markets. So Shani, unfortunately, is not on this one. She is under the weather, so you have to just listen to me, but hopefully that'll be okay for just this one time. So we know that this is an incredibly stressful time for many investors. So losses have certainly accelerated over the past couple of weeks, and we know that can be really scary. We also know that much of the advice out there is good-natured, but can really feel useless. We want to quickly provide our thoughts, and we'll do a longer episode about where things stand and where they may go in a couple weeks. So let's start with some of the advice that we've seen out there. The first is that you shouldn't look at your account. And this piece of advice is just completely unrealistic. And I understand why people are saying it. Volatility causes stress, and stress kicks our action bias into overdrive. And this need to do something, anything, to confront the bear market is natural, but in most cases, it leads to decisions that are detrimental to your long-term wealth and the ability to achieve your goals. But sticking your head in the sand isn't realistic. Share market has moved off of the business pages and onto the front pages. People are talking about what is happening, and it's incredibly hard to ignore the news. The other piece of advice that we hear a lot is to do nothing. And once again, this is reflecting the notion that in many cases, emotionally driven decisions don't work out well. So if many decisions we make during times of stress are poor ones, then I guess we should just do the opposite, make no decisions and do nothing. Once again, easier said than done, and it implies that there's nothing you can do right now to help make it more likely that you will achieve your goals. And that is just wrong. The do nothing crowd is the same crowd that told you that the market would just keep going up. So let's take a step back and talk about the situation we are in. As we've been talking about since the beginning of this podcast, the market was incredibly overvalued. We're seeing those valuation levels reset, and we are seeing interest rates reset. What we're basically seeing is a return to normal. So chances are there's a ways to go since the market is not cheap yet. We'll spend some more time exploring this in a couple weeks. And since you listen to this podcast, you are an investor. You are not a speculator. An investor is focused on the inherent value of any investment and making decisions for the long term to achieve a goal. Speculators respond to price movements and try to guess where the market is going next. So let's take the action bias that we all have and not try and suppress it, but instead channel it in the right direction. You likely feel like you have lost control of your future and your ability to achieve your goals. So let's take back control. You want to do something. You feel like you need to do something. So let's start with making sure you have a plan. A good plan and a comprehensive plan that will help you achieve your goal. And we do talk about plans a lot on this podcast, and we know some of you have one and some of you just ignore it and say you'll do it later. And that was great when the market just kept going up, because who needs a plan when you're getting these huge returns? But the reason you needed a plan, and the reason you need one now, is because of what is happening in markets. And people with a plan are always in better shape in market downturns. It is still stressful and it's still really difficult to navigate, but a plan keeps you focused on what you want to achieve and how you're going to get there. So use this stressful situation and your natural action bias to create a plan. Go back and listen to our How to Construct a Portfolio episode to learn how to set goals. Go back and listen to our Selecting Investments episode to reach your goal so you can understand how to put together an investment policy statement, or IPS, to document your investing strategy. And if you have a plan, go back and read it. Focus on your goals and recalculate the required rate of return. Chances are that it's gone up, which is a signal that now is not the time to move into investments with lower long-term expected returns like cash. It is impossible to do this completely, but our goal as investors is to be as rational as possible, to make thoughtful and deliberate decisions with our end goals in mind. Doing that in face of a falling market is incredibly hard. That is why we want structure around our decision making, and that is why we want a plan. So now is the time to slow down your decision making. Go through your plan, and if you think there are changes you need to make to your portfolio, take a bit to think on it. Write down the reasons you are making these changes, write down what could go wrong with this decision, and find a mate to talk it through before you do anything. And remember, we are right here to support you, and we are all in this together. If you have a question, send it to the email in the episode notes or attend one of our free webinars. Listen to our backlog of podcast episodes. Things will get better, and you will achieve your goals, even if it seems further away at this moment.
Any advice in this podcast is general advice or regulated financial advice under New Zealand law, prepared by Morningstar Australasia Proprietary Limited and or Morningstar Research Limited, without reference to your financial objectives, situations, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest. To obtain advice for your own situation, contact a financial advisor.